Let's now define what's a line of credit. It's an open-ended tool that money is flowing through. I think the most common example everyone can understand is a credit card. You call up a bank, you get approved for a new credit card, it's a $10,000 limit. You purchase $3,000 of goods and services. At the due date, if you don't pay the $3,000 off, you still have $7,000 available in the line. Now, I call that availability access to cash. But once you pay the $3,000 off, you have the full $10,000 available again. So money's flowing in and flowing through this tool.
This is Biz Ninja Entrepreneur Radio with your host, Tyler Jorgensen.
Welcome out to Biz Ninja Entrepreneur Radio. I'm your host, Tyler Jorgensen, and we're back here for another week of season 16. We are in our 16th year of doing this show. We are currently on ABC News Radio. I'm very grateful for our radio station and sponsors and all those people. And so we're excited to be here. And today we're going to talk with Howard Polansky about money. And I'm going to let you, Howard, really share what this is and what you're doing. But first of all, just want to welcome you out to the show.
Tyler, thank you so much. It's an honor.
We're going to get into the heart of what you do in terms of finding hidden cash for people. As a marketer, I always say I find hidden cash for people in their operations and their pipelines, but you find it in much more sophisticated, intelligent strategies. I'm really excited to go into it. But you have a background in dentistry and in being a doctor who has turned into a financial doctor of sorts. How did you go from doctor to entrepreneur like this?
Yeah, I mean, I've got to say, normally you don't want to take advice from your doctor, from your dentist when it comes to money. Okay. Right. But I did practice for 16 years, military first, private practice second, had my own practice for 9.5 years. Tyler, the problem was I hated it. I was burnt out. I was overwhelmed. I was taking it out on everyone else around me. And sometimes life leaves you little clues, and other times life hits you with the 2x4. My 2x4 moment was Sunday morning, Memorial Day weekend, 2018. Jaden, my older son, is 12 years old. I'm sitting next to his bed. He realizes I'm there and he says, "Dad." His voice is barely above a whisper. "Yeah, buddy." I lean over the bed. I put my ear over his mouth to make sure I can hear him. And he says 3 words I'll never forget. "Am I dying?" 12 days earlier, Jaden came home with a stomach ache. 3 days after the stomach ache, we're in the ICU at the Children's Hospital having emergency surgery. It was appendicitis that turned septic. 29 days in the hospital, 19 of them in the ICU. 8 straight days of sedation because he went to the operating room 5 times. After they take the tube out of his throat, they give him methadone and morphine to bring him down from the drugs he was on. Imagine your child looks like a heroin addict coming down from a high, and the very first question they will only ask you, "Am I dying?" After telling Jaden, "No, you're not dying. You've had prayers from thousands of people all around the world and you're going to be just fine," I walked out that room and I broke. I was already miserable. I was burnt out, as I mentioned before, and I was taking it out on everyone around me. But when I broke, only one thought seared into my mind. If life is this fragile and I'm unhappy with the path that I'm on, burn the ships. It's over. That's what I did. Sold my practice. September 2018, just walked away. Now, I know
of all the burning of the ships, selling a practice is a nice way to burn ships, right? There are more brutal ways to exit a past, but it's a big difference when you don't know what you're going to do next, right?
Yeah, and that was it. And now I want to make sure I address one question that the audience is like, is your son okay? Thankfully, yes. He is now 20. He's in college, no long-term health issues. Everything worked out fine.
Well, that's
I
good.
want to acknowledge I've got a younger son also. Thankfully, he has not gone through anything like this. Um, but you're correct, Tyler.
Yeah.
I had no idea what I was going to do next. I was just it, my identity was wrapped up in my work, which I think
Yeah.
most people can relate to. And
Yep.
now all of a sudden I'm just floundering. But as I'm transitioning out of dentistry, I'm sitting with another dentist who asked the obvious question: how are you walking away? Because you have an understanding, being around some of the people that you've helped with marketing. Dentists carry a ton of debt. Okay. And for the average person who has no idea, the average 40-year-old dentist is at least $1 million in debt. That's their negative net worth. Okay. At least, if not more. So this guy asked me that question, and I made one dumb comment to him. I said, I kind of figured out how to make money move. He gave me that Scooby-Doo look. I tried to explain things that day. I just didn't do a good job. But a few weeks later, I get the next statement in the mail for my house payment. I take a picture of it as a joke and I send it to this guy. I said, hey, take a look at this. Tyler, my house payment was $24.19.
Now, for those of you who don't own a house, that's low. Okay, so obviously, when you say you figured out a way to make money move, that there's a lot that's not being said, right? So, dentist, the average dentist, like you said, the amount of debt that they're in at this point, you sell your practice. You didn't just liquidate and pay things off. You created some really specific strategies, right? So guide us through what that actually is.
Yeah. And so what I ended up doing and how I got to the $24 house payment is I am utilizing something called the line of credit. All right. So let's now define what's a line of credit. It's an open-ended tool that money is flowing through. I think the most common example everyone can understand is a credit card. You call up a bank, you get approved for a new credit card, it's a $10,000 limit. You purchase $3,000 of goods and services. At the due date, if you don't pay the $3,000 off, you still have $7,000 available in the line. Now, I call that availability access to cash. But once you pay the $3,000 off, you have the full $10,000 available again. So money's flowing in and flowing through this tool. So let's go back to my $24 house payment. What I did is I refinanced out of a traditional mortgage, out of the one-way street where the money goes in and you can't get the money back out. I broke open the titanium safe. So now that when I do bring in money, I can put all of it against the debt, because I know the next day I can take out whatever money I need to.
Got it. So you went with a first lien HELOC. So your primary loan, you refinanced into a home equity line of credit so that you can minimize interest when you have extra cash, and then access that cash again when needed.
That's 100% correct. Yes. And I already know people are hearing this and saying, but what's the interest rate? I've got a 3% mortgage. Why would I don't even need to know what the interest rate is. I know it's going to be more than that.
Sure.
And my argument back to you, and we can go through a very simple example if you'd like, is you don't pay an interest rate. You pay a payment. And so if it's okay, Tyler, can we play the little example?
Let's do it.
Through this. All right.
Yeah.
So let's imagine that we have a car loan and we got it at a 0% interest rate, $400 a month, $12,000 remaining. So we have 30 monthly payments to go. But we did set up a line of credit. It happens to be large enough to be bigger than the car loan that remains. But if we utilize it, it's at a 10% interest rate. And so in this example, I would say we're going to take the whole balance of the car and move it onto the line of credit. So what happens? Two things happen. Number one is that $400 payment is now out of your life. but now the alarm bells are going off in people's heads. I had a 0% interest rate. Now, not only am I paying interest, it's at a high interest rate. Why in God's name would I do this? And I go back to the statement I just said. You don't pay an interest rate, you pay a payment. And so what I mean by that is that just because it was a 0% interest rate did not mean it was a $0 payment.
Right. So it's the idea of cash flow and monthly expenses, right? And what's impacting you on the daily.
100% correct. There was still an outflow of cash every 30 days. But when we're utilizing a line of credit, the only thing that we owe is just the interest that's accrued that month. And so a $12,000 balance that remains $12,000 for 30 straight days at a 10% interest rate, the only thing you owe is $100. And so, Tyler, I don't know if you're a math whiz or not, but if it was a tight month for whatever reason, which would be easier to pay, 400 or 100?
Yeah. No matter what my math grades were, I know the answer to that question.
And so by doing this, we've just increased that person's cash flow $300. Okay. And then in terms of how to pay this off, we've got to make sure that we have more cash coming in than we pay out, et cetera, et cetera. But that's the start. That's the basis of this.
And I think the reason that the initial reaction most people are going to have to this is that it is this exact thinking that somebody who is undisciplined and doesn't have cash coming in gets in trouble, right? You can't make those kind of moves without a strategy and a plan. Otherwise, you're just deferring and moving things around. And there's a small difference between just surviving and delaying and being strategic. And so how do you, obviously dentists in general, but people like you think more strategically, you're forward thinking. How do you ensure you don't end up in a bad place?
Well, that's a really, really good question. And part of this is that when I sit down with someone, I have to get the numbers from them to see and I can tell right away, is someone a good steward of their money?
Right.
Okay. So let's go back to what are the 4 risks with this? Because this sounds great. I'm magically making money coming out of thin air, which I'm not. It's literally just math. But the 4 risks are, number 1, you have to have the cash flow. If your income is not greater than your expenses on a consistent basis, this does not work, period, end of story. That's not to say you need a new roof. Something happens with the car, you're going to be negative for 1 month. That's why we have an emergency fund. Okay. Number 2, an interest rate, the interest rate's going to move on you. When the Fed says we're raising rates or lowering rates, it does change. But let's walk through my personal journey with this and my house payment. Okay. In 2021, while the interest rates were still low, my average house payment was about $350 a month. In 2022, while the interest rates were increasing, it seemed like every day from the Fed, my average house payment was $500 a month. In 2023, when the interest rates were high, my average house payment was $600 a month. For you listening in the audience right now, which is easier to pay? Your fixed payment of whatever it is, or my variable payment of $600? I'm not asking which one's paying the debt down, because if you look at the first few years of your mortgage, you're paying jack squat on it anyway.
It's true.
But which is easier to pay? Because to Tyler's point, we're looking from a daily or a monthly basis in terms of, I'm trying to just survive the next 30 days. What's going to provide me the most cash in my pocket today? Number 3, a line of credit can get closed. And yes, this was a concern back in 2008, 2009, kind of, sort of, not really. See, people only heard the headlines from the mega banks. Crank of America, Hell's Cargo, Mace Bank, Capital One. All right. They're the mega banks. They're going to be the ones that get the headlines. But when people were using community banks, regional banks, credit unions, I've spoken to enough of those bankers to know as long as people were being good stewards of their line, we didn't have to do anything. But Tyler, the biggest concern that I have in sharing this with people is that you raid the piggy bank. I've got an acquaintance. I use that term very loosely. At one point, the husband was part of the Watch of the Month Club.
Mm-hmm.
And I think they still have a car lease payment of $1,300 a month. Don't even own it. They're just leasing it. They do just fine. But if you got them in a corner and asked them why do you spend on some of the stuff that you do? It doesn't take long to get to the truth. To impress our circle of friends.
Sure.
And the problem with that is that there's no end game to that. And so if I showed this couple the system, they would start it, they'd raid the piggy bank, they come back to me and say, Howard, this doesn't work. And I just have to look at them and say, no, you're just an idiot. You're an idiot that happens to make a lot of money, but you're still an idiot.
Right.
And so here is my warning. You know you better than I know you. And if your next thought is, I've got this giant wad of cash and I'm going to go buy my next Lamborghini, or I'm going to go buy my first Lamborghini, unless you have the cash flow to purchase a Lamborghini, please don't buy the Lamborghini. Please don't start this. You're going to get yourself in trouble.
Yeah, that makes sense. Now, I don't want to dive too deep into how this works and that sort of thing. I think people can go to your sites and go to financiallyled.com and learn more about you. But there's some gaps there, right? So far, where obviously if you had a first mortgage and you then switch it into a line of credit, you don't instantly have new cash available unless there was a higher balance, all those kind of things. So but break us down on just, this isn't the only part of the puzzle, right? You have kind of created a deeper system. So give us the basics of the system, and then let's go into just how you transitioned into, helping other people.
Yeah. So the basics of this is, number one, we're having to look in terms of, let's keep it on the personal side because it does apply to business also. But on the personal side, do you own a home? Do you have this asset that we can use as collateral to be able to get a line of credit? And if you've been in that home for a number of years, there is probably a substantial difference between what you purchased it for, what the mortgage is remaining, and what you could sell it for today. So let's just play the game and say that you could sell your house for $1 million, which, Tyler, I know where you live. That would still be just a shack. Maybe it's just a bathroom. Who knows? But you can sell your house for $1 million. That's what the market rate is. But you have a mortgage of $300,000. So there is a lot of equity that's trapped in your house where, if you could access that, we now have the capability of playing this arbitrage game, just like that car example. All right. In the rule of thumb, just because I don't know where people live, let's just call it 80% of the value of your house we can manipulate or play with. So 80% of $1 million is 800,000. We have this first mortgage of 300,000, which means we can get a line of credit of $500,000 if we qualify. All right. Now, some people will say it's like, oh, my credit union, I know that they've got HELOCs. Great. Is that the right credit union if they max out their home equity line of credit at $150,000? No, you're still leaving $350,000 trapped. And I've had some people ask me, it's like, why do I need a line of credit so big? And my answer back is, because they will give it to you. Tyler, do you sleep better if you have access to more money?
Generally, yes.
Yeah. When were the times with your business when you were stressed?
Oh, I didn't know if it was rhetorical. Yeah, no, money is typically the big stressor. If not, there's other things too. But yeah, money's always a stressor in business and personal life.
Right. It's when when your buffer is down for whatever reason or the cash flow is tight. And so when we can get lines of credit on our house, on our business, where the rule of thumb there is 10% of your annual revenue. So if you're $1 million business, you should be able to get a $100,000 business line of credit. If we have an after-tax stock portfolio, not a 401k, not an IRA, those are retirement accounts, we can get a line of credit against that. It's called an asset-based line of credit. So if you have a portfolio of Google and Microsoft and Tesla and Johnson & Johnson, you don't have to sell those stocks to get cash. They literally know second by second what the value is, and you can use that as collateral to get access to cash. This is what Elon Musk did to buy Twitter. Okay. He used his Tesla stock as collateral to be able to, in his case, he got a loan, but he never sold the Tesla shares. He just used it as collateral to say, hey, help me get some money to borrow so that I can buy Twitter. Now X, whatever else it's going to be called. The other line of credit that people may not be aware of is on life insurance. You can, if you have a permanent policy known as whole life or IUL, you can build cash value. That's actual cash that you can borrow against. So I don't care where we get the lines of credit from. It's just a matter of, do we have this open-ended tool that we can have money move through the line of credit?
And I feel like you're right there to explain the arbitrage and what then happens, right? Which is like kind of the whole thing that brings it together. So bring it home for us.
Got it. Okay. So we go back to the car example. We've moved the $12,000 onto the line of credit. And let's just say that we are bringing home $7,000 a month and our expenses are $5,000. Okay. The $7,000 we're not keeping in a checking account. We're going to move it into the line of credit because it's open-ended. I move that 7,000 in today. I can move the 7,000 out tomorrow. But we're going to move the 7,000 in, and now that balance in the line of credit is going to drop to $5,000. And when we're being charged interest, it is on the balance at the end of the day. So we're not being charged interest on the $12,000 anymore. It's now on the $5,000. And we rearrange our life so that our expenses are due as far as possible from when we get paid. So if we got paid on the first, all 7,000, we try and set it up that our expenses are going to be on the 28th. And on the 28th, when we need the 5,000 to pay the house, the utilities, the credit card, we pull the money out of the line of credit. The balance is going to go up to $10,000 for day 28, 29, and 30. And here's the magic, Tyler. We thought we were going to be paying $100 in interest, but that's only if we left the balance alone. Because we manipulated the balance within those 30 days, the actual amount of interest charged to us was $52 in this example. And so we rinse and repeat month after month until we pay down the balance to zero. And so we're not, as someone else said it beautifully, is our line of credit now becomes our checking account. That's it. It's just that we're smushing. We're not having our assets and income and our debt separated anymore. We're smushing everything together so that we can offset as much interest as possible.
So you're using a lot of time arbitrage as well, where you're just, like you said, manipulating the timeline of the calendar to minimize the interest. How is this helping businesses, dentists, things like that? I mean, you've had some real positive impact that you've had on people.
Yeah. In terms of the cash flow improvement that occurs within the first 12 months, for those that are business owners, the average has been over $65,000. And that has ranged from as little as $15,000. The highest so far has been $290,000. not because they worked any harder, not because they sold anything else, literally because we have now paid off the debt in a more efficient manner. For those that are W-2 employees, it has been about $38,000 cash flow improvement in the first 12 months. Living the same lifestyle, it just costs you less. And so for those people who are thinking about maybe switching careers, I would encourage you to look into this first, because banks look at where you are right now. If you have a W-2 job, you look like stable income right now. They have no idea what's going to happen in the future. You might know what you want to do. So you get the line of credit while you still have the W-2. You have that extra liquidity, that extra emergency fund there. And then what happens 30 days after you've closed? Hey, I didn't know what happened. Life just happened.
Sure. And so you now help other people and other businesses do this, and you're talking about the financial impact, but there's a deeper impact, right? When you're able to free up cash flow, and so how is this freeing up 38K or freeing up 65K in cash flow improvement? How is it actually impacting these people's lives?
Yeah, and I know that we're coming close on time, so I just have to be pretty brief. It's buying back time. It's speeding up the possibility to people's dreams. I've had one person use that line of credit to buy a lake house. Now, they say it was a fixer-upper. I don't care. When did they think they were going to get this lake house to use with their family? In 20 years. 20 years they were hoping. They were hoping to get a lake house. And now they're having the dreams and the memories and the experiences with their family, something that's meaningful to them.
Right.
I had one other client in their mid-40s. They had a brain aneurysm. They had two ruptured aneurysms and a mini stroke. They are married. They own a business. They have 3 kids. They've been a widow once before. And then this happened. And they had the business line of credit in place to help the business survive because they were having brain surgery. And if that wasn't there, who knows what would have happened?
Yeah, those are significant. And I think what you just touched on is really what's most significant to me in this, is that by deploying alternative strategies, you can start to live the life of your dreams sooner. And to me, that's everything, right? We don't work so that we can, we don't live just to work, right? The goal is that we live our lives. So what is non-work related? What's one item on your personal bucket list you're going to accomplish in the next 12 months?
Well, I am hitting a milestone birthday. I can't believe I'm saying I'm turning 50. But I'm going to be going up to Glacier National Park.
Very cool.
And a little bit before peak season, but I am just excited in terms of maybe not the 35-degree morning chill, but the pictures and the environment and the scenery that's out there. I am just so excited to see. So that is what's on my near-term bucket list.
I love that, Howard. And where should people go to learn more about what you're doing and creating?
Financiallyled.com. And hopefully, Tyler, you'll have that. Are you leaking cash flow? Are you leaking cash flow quiz? 8 questions. You can answer it in 3 minutes and see where you're at.
Yeah, we're going to link to both of those. But for those that are just listening, it's leakingcash.scoreapp.com if you want to take that quiz. And we'll link it in all the show notes. So to all my biz ninjas, wherever you're tuning, listening, or watching, it's your turn to go out and do something.